Welcome back. Jared Roboski here with CMG Home Loans. Just wanted to cover the Fed rate hike, December 2022. I watched the meeting, finished watching the speech, so you don't have to. I'm going to give you a quick wrap up of what happened. So the Fed hikes by 50 basis points as expected. The Fed's dot plot is penciling in another 75 to 100 basis points in additional hikes in 2023 compared to the end of the 2022 level, for a terminal rate of around 5.25% by the end of 2023. But the market is increasingly going to test the Fed and pricing it around 4.9% by mid 2023 and 4.45% by the end of 2023. So who's right? Is the market going to be right, or is Fed Chair Powell going to do what he says? And let's look at this dot plot. So here's where we are right here. This is where they just hiked the rate to. So we'll end this year right here, right between 4.25% and 4.5%. Now next year, out of these 19, only 2 are saying we'll be below 5. The rest of them are all saying we'll be above 5. Most likely we'll end up, they'll stop between 5, 5.25. So what that means is that would mean another 50 basis points and a 25 basis point hike, or 325 basis point hikes in a row. He did say he would slow down the pace of hikes. And then here's 2024. These are all over the place, but you can see the most people, most of the Fed members think that the Fed rate will be around 4%. And then in 2025, they believe rates will be much lower. They'll end up dropping it down, and they'll have inflation solved by then. So the key talking points were the U.S. economy has slowed significantly over the past year. Labor market remains extremely tight with wage growth elevated. The pace of job gains has slowed, but the labor market is out of balance. The new target rate is around 5.1% in 2023. Expect ongoing rate hikes. Fed members, 17 of 19, voted to raise the rates to 5% or higher. And there's a high probability of having to leave rates higher for longer due to the strong labor market and wage growth. So that'll most likely have an effect on the stock market and housing market. The markets still don't really believe what he's saying. So I did think this was really interesting. This is what's happened over the last several Fed rate hikes this year. So going into the meeting, markets dumped, and then after the meeting, it went up. May, same thing. June, July, November, we did the opposite. We went up first and then down. And then so far today at the recording of this video, we went down, and so far we're covering some. So only time will tell what happens. So we'll give you a little more updates as the meetings progress. The next meeting will be in February. So I'll make another video in February about this rate hike. And then I'll make a video a little bit later in this month about where I think interest rates are heading. I'll digest a little more information, and we'll see what my prediction is where rates are headed. I did think they would go to about 5%. I don't really think they'll go over that, but I'll have to reevaluate and make another video here soon. Thank you so much for joining me. And subscribe to my YouTube channel if you find this information is helping you in any way. I do produce a lot of content on real estate, finance, and investing, and even have trading tutorials and some live trade videos as well. So thank you so much. You have a great day.